Kunal, hi, morning. Let me come to you. And I'm not touching upon the Adani names, but just what the index and the kind of pressure that the banks put on the markets yesterday. What's that telling you? Are we headed for some more downside?
Yeah, maybe some bit of more volatility. I would not say major downside for the indices because the pace of correction for the index is halting. You're seeing intraday recoveries, coming back into both the indices, Nifty as well as Bank Nifty. There is some sort of a support which is building up closer to that 23,000, 23,300 as a range for the index. Even yesterday, for example, we managed to just about bounce back from the 23,300 levels. 50,000 as a round figure, and a strong psychological mark is acting as a support for the Bank Nifty. We managed to have a touch and go moment, just a shade below the 50,000 mark yesterday in the first half, but the recovery in the second half lends, a lot of credibility and indicates that this 50,000 mark could be a decent support for the banking index. So now I think what matters is that even if the index consolidates, remains to a range, and 23,000, 23,300 as a broad range, if that gets protected, I think that would still be a positive sign because the market breadth still remains to be into a deep oversold territory. We are still into a point where almost 75 to 80% of the stocks in the Nifty mid cap 50, small cap 50, etc. I think many of these key indices, I think they are still into a point where many of the stocks are trading below their 50 and their 100-day moving averages. So when you have such kind of a deep oversold market breadth, it warrants some sort of consolidation or at least some sort of recovery from the deep corrective phases what we've seen over the last few weeks.
All right, let's connect with Naresh as well. And Naresh, getting a sense as to how you are reading into the overall market setup. The fact that yesterday we did come under a bit of a cloud. What is it that you're working with by way of levels? And do you believe that the broader markets are going to move neck to neck with the frontliners?
So if you look at the overall correction, we've corrected from 26,300 down to 23,300. In earlier times, whenever we've seen such a large correction, we generally see a 1.5 to 2x move on the small cap index and the mid cap index, but we've not seen a sharpest down move or a larger down move on the small cap and the mid cap index. That clearly tells you the whole sell-off is purely from the FII side. We are not seeing similar pressure or panic on the mid cap, small cap indices. But what we need to see is look out for reversal signals because we've come to the band where there are multiple supports and the whole post-election move has been negated. Just a high before the election was 23,100, 23,300 on opinion polls. So we've come back to those levels. A lot of stocks in the heavyweights have corrected much larger. So if you look at Reliance is down 24% from the top, but you just have HDFC Bank just 2.5%, 3% down from the top. So overall, apart from HDFC Bank, if HDFC Bank would have corrected, it would be much more lower. But overall, at these price points, we would be looking out for the previous day's highs to cross. That would be our first indication on a closing basis a reversal is in play.
If you like this video, then like, share and subscribe to ET Now.